Oh, baby, folks. Ford stock. I told you it was popping. Hey, look, you can go back. I told you Ford stock was popping. I don't know if I left it in a comment or I think I left it in a comment. Maybe. Look, Ford, I knew there was some good stuff coming out of Ford. We're going to take a look at these earnings today. See what we have for Ford, okay? Why did it pop 8% in the aftermarket? We'll take a peek. Obviously, posted earnings if you weren't aware. Year to date, though, this stock is up 82%, so there's been massive change year to date. In the last year, up 100%. It's been a great buy for me. But if you think about it over the last 5 years, we've only seen a 32% share value increase. So really not much going on. But since the dip here in 2020, this thing has taken off 265%. I'm glad I bought more when I did, by the way. But let's take a look at these earnings. Quarter 3 non-GAAP EPS of 51 cents beats by 24 cents, much better than expected. And a GAAP EPS of 45 beats by 24. Beautiful. Obviously a company that missed on profits by a good margin last year. I mean, we're talking about no profit being made. And it's good to see profit being made while also they're working on developing new electric vehicle technology. So it's good to see that they're actually able to continue this profitability, and they need to. And they got back to where they were. Would like to see a little bit of improvement, but it's a massive beat. I mean, we're talking about double of what they expected. Automotive revenue came in at $33.2 billion, which is a decline of 4.3% year over year, but still beats by $410 million. So it's a massive beat while declining. So let's see. That's why we pop. All three aspects beat. An increase of guidance for the full year adjusted EBITDA to between $10.5 to $11.5 billion expected. So growth is expected in terms of that. So you love a nice beat and raise. They expect cash flows over current planning period to be more sufficient to fund growth priorities. As I mentioned, electric vehicles is really the growth priority. We're talking about the Ford F-150 Lightning, obviously a big seller for them in the future. We'll see. I mean, obviously reservations have topped around 150. We'll see what they put it at now, because they always will pinpoint that as well. They're generating quarterly revenue expected to be $35.7 billion and a net income of $1.1 billion, which is actually really good for this company. Even for its heyday, it's really good. So I'd like to see that continue. And again, maybe eventually, I need some Wawa. Maybe eventually they might bring a dividend back. I'm not too concerned at this point. I mean, I'm perfectly fine with share appreciation on this standpoint if you're able to grow me by a good aspect. So let's see what's going on. So let's look at this. Let's look at these numbers. So in terms of market share, they did actually decline by a little bit. You can see year to date at 5.1% compared to 5.9%. Obviously, you want to see that improve. You want to see market share improve in terms of percentage of vehicles on the road and purchased in general. Let's look at some of the gap numbers here. So last year they did 37.5. This year they did 35.7. So a little bit dyslexic, but look year over year and you see some really good numbers. 98.7 compared to 91.2 when you're looking year to date. It's an 8% increase, which I like to see. Net income also increased when you look year to date. This quarter did decline technically, 2.4 compared to 1.8 this year. But on the year, though, they have increased by a good margin, actually, $4.1 billion in terms of increase there. So really nice to see that. And EPS line has increased year to date quite a bit as well. Just a tough quarter in terms of comparable sales for them, but year to date still doing really well. It's nice to see. It's nice to see. So in North America, they're making up 11.2% of market share. South America 2.4%. Europe 6.2%. China 2.5%. Really big market for them. They need to get IMG 1.8%. So China's a really big market for them in terms of what they could do in the future. So I'd like to see that expand, obviously, and see what they can do. I mean, that's kind of the main point there. Obviously, majority of the revenue is still in North America, but global expansion could be really good for them. So great. So improvements in semiconductor supplies too, which is worth mentioning because that's been a concern, has increased regional product shipments 67% from Q2. So massive growth there, and that's where you're able to see them actually, all these orders for vehicles, they're able to start producing them, which is fantastic. Ford remained the number one commercial vehicle brand in Europe, which is worth mentioning, obviously via the Ford Transit, as you might expect. The vans, the work vans, for sure. In China, which is progressing with its own turnaround, retail sales of the Lincoln brand were up 24% year over year. Pretty nice. Terrible year last year, too, for Lincoln, for sure. Really good to see. South America, nothing crazy. Posted its 8th straight quarter year over year better in EBIT. So there's growth there, but not a massive segment for them. In terms of mobility, Ford, Argo AI, and Walmart last month are collaborating on the last mile autonomous vehicle delivery service for customers in Miami, Austin, Texas, and Washington, D.C. So could be cool to see what that looks like as we go into the future. Maybe they could expand that partnership throughout. And again, that's great because Walmart, obviously being the biggest brick and mortar retailer, if they're able to work on that, it'd be really cool to see. And for Ford Credit, they achieved another exceptional quarter with $1.1 billion in earnings before taxes as vehicle auction values continue to be at near record levels. So good for them. Look at this. Who mentioned it? Look at this title. So Farley here. Not Chris Farley, sadly, the greatest comedian to ever live. Farley has said that Ford Plus plan combines foundational strength and evolving new capabilities to create superior experiences for the customers and profitable growth for Ford in electric vehicles, commercial vehicles and services, connected services, and autonomy and mobility. But here's the crazy thing. CFO here, John Lawler, says the company expects to invest $40 billion to $45 billion in strategic capital expenditures between 2020 and 2025. So you think about that, most of that's going to be put into battery technology and really just electric vehicles in general in terms of development. So I like to see it a lot, including 1/2 of more than $30 billion it plans to devote exclusively to BEVs during the same period. Gosh, it's hurting me. So it's great. New F-Series truck plant in Tennessee, which is going to be nice. F-150 Lightning, baby. They've doubled to 80,000 planned yearly production volume for the F-150 Lightning. Obviously, you just see that expand because the orders are really out the wazoo for it. So people are really excited for this. They want to see it. They want to see it. Construction of Ford's manufacturing center in Germany and the company's JV in Turkey is going to build the e-transit commerce van, which is good. Good for them. Obviously, commercial vans are where they're succeeding in Europe, so that's where they're going to continue to produce. I mean, that just makes sense there. So, yeah, that's exciting. And that's right. This is a big, important note. Ford's board of directors voted to reinstate a regular quarterly dividend starting in Q4. The fourth quarter dividend of 10 cents per share on outstanding common and Class B stock will be paid on December 1st for shareholders as of November 19th. Not quite what it was, 10 cents, but they're reinstating the dividend because they're showing profitability consistently. I like to see it a lot. So that's good. If you're a Ford shareholder, I think that's honestly one of the biggest reasons why this stock popped. Look, the reason we saw such a massive sell-off last year was the lack of dividend. I mean, people were holding Ford stock solely for the dividend back then. I mean, that's why we didn't see share appreciation prior to that. People were just holding it, and they weren't buying it. They weren't buying more. They were just holding what they had and earning dividend on it. So that's why the stock price was pretty stagnant. Now we have electric vehicles, and we have a dividend still. That is something that they can offer a lot of shareholders, so it's exciting. No guidance for adjusted cash flow. But again, this is exciting stuff. If you're into Ford stock, you're happy about this. I'm sure you like the dividend. I personally like them spending the money on really improving that electric vehicle business because that's kind of the future for them. And again, that's what they are doing. So it's one thing we're going to be looking forward to. They're able to do both right now, which I really love, as you mentioned, by what they're spending. So let's look at the balance sheet and then we'll wrap this up. Total current assets is a massive balance sheet, as you might expect. $116 billion is what they had the year prior. 9 months later, sitting at $106 billion, 106.9. So there's a decline there, right around $10 billion decline. And you see most of it here in this Ford credit credit line here. Assets in general fell as well, 267 compared to 252 billion. Let's look at the liability standpoint and see what we're looking at. This is where I get pretty happy with it too, because you see assets decline, but we're able to see a decline overall in liabilities as well. Current liabilities at 97.1, or were at 97.1, now sitting at 89 billion. So we saw a decline there, and total assets in general at 215.9 right now compared to 236. So a massive decline there, able to pay off what looks like some. Well, actually, it's just this Ford credit line. So really good to see on that aspect. So stockholder equity has risen quite a bit, $6 billion raising, 36.7 compared to 30.8. Not a company with necessarily the most equity on the balance sheet, but I like it a lot. You think about the business that they're in. It's not a bad balance sheet, and they've been able to improve it quite a bit in the last 9 months. So I'm really excited for that. You talk about Ford, and we're talking about a stock still trading at $60.8 billion market cap, which I think is pretty cheap. I mean, this is a company that in a year brings in over $130 billion in revenue. Last year brought in $127 billion. This year going to bring in right around $130. And they're trading at a market cap of $60 billion. This stock's criminally undervalued. P ratio is still at 18, but actually cheaper after this quarter. And the forward P right around 15. This is a stock that is ridiculously cheap, and I like it even at these levels. And I'm someone who's in under $9 an average cost. But I like this a lot. I like these. I like what this company is able to offer, even after an 8% boom after hours. Look, consider this. It's trading at a higher market cap. We're still talking about not even half the market cap is what it's going to be. Not even half the revenue is what the market cap is going to be at for this company. It's trading really cheap, and it has some interesting growth factors for the future, and the dividend's going to be reinstated. I like it a lot. It is at a 52-week high, but I still like Ford stock here. I mean, I really do, and people think I'm crazy for it. They're going to think I'm crazy. But this company's actually quality. New management's doing great, and I'm excited for it. But look, if you think I'm dumb, let me know, please. Tell me in the comments I'm stupid. I'm a poopy head. I hope you have a great day.